Hello everyone, thank you very much for joining me for today's snapshot. Today we're going to be talking about inflation and the US dollar. But before we do that, please take note of the following important information. Please note that CFDs are high-risk products and that you should be completely aware of the risks that they pose. Also, please note that this is a general market commentary only and does not constitute investment advice. And finally, these are the sources of information that we'll be using today. Alright, thank you very much for that. Now, the inflation adjustment has generally been moving the nominal yields. However, since the beginning of April, we do note that the yields are down, specifically referring to the US 10-year, and the US dollar has followed. Let's take a look at the chart. Alright, so in our top pane here, we have the US 10-year yield, and we're looking at this in terms of nominal rate equals the real rate plus the inflation adjustment. You can see from the beginning of January how the nominal yield has moved up and the dollar tended to follow it. However, since the high near the end of March, the yield's actually down on an absolute level. And if you take a look at the US dollar has followed it down. So the market, very, very eager to get some data on the inflation adjustment. Let's just end off with some key takeaways. The market is waiting for data that points to sustained inflation. Currently, nominal yields are moving in a range around 160. However, they are down since their high at the end of March. The direction is likely to influence the US dollar to a large degree. Hope you enjoyed the snapshot. If you did, please go ahead and click on that subscribe button. Thank you very much for joining me today. Looking forward to speaking with you again in the near future.